this morning I want to introduce the IPO, the initial public offering for Caribbean Cream Limited, better known as Creamy. The products are actually over there, which will be served a little later on today. They have 20 flavors, but they introduce a new flavor every quarter. I think it shows the company's innovation. We decided to go ahead in March with this introduction of the company, especially after the second debt restructuring in the last 3 years. We think it's important for investors to look at other J dollar investments, especially in the real sector, and Creamy represents that opportunity for going forward. Today on the agenda, you're going to hear from Wayne Ray, which is a very important component of Creamy. He's a mentor of the company, which is in following with one of the JSE rules. And then you're also going to hear from our manager of investment banking, who is Lamar Harris. And you're going to hear, very importantly, from Chris Clark, who is the gentleman who has grown Creamy over the last 6 to 7 years, to talk about the company's background, going forward, and the type of amazing growth that the company has had. And you're going to hear from our manager of wealth division, Ryan Strong, to talk about why the company is a very sound investment offering and strong investment positives. Again, to stress, and you'll hear it in today's presentation, I think with the benchmark rates and Bank of Jamaica interest rates at 5 3/4 before tax and 4.31% after tax, there's dividend yields on the Jamaica stock market in Jamaican currency given higher rates of return than a Bank of Jamaica CD. Chris, Ryan, Lamar will talk to Caribbean Cream's dividend policy. We don't think it will be as high as that. We don't see it as a dividend play, but it shows extremely, very strong historical growth. We see having very good growth rates going forward over the next 3 to 5 years, which Lamar will speak about. And it's a very sound, strong offering for going forward in terms of what we've learned over the past 9 to 12 months with the client. The board of directors is also present up here. The non-executive directors are Mark McKenzie, formerly managing partner of Dennis & Geddes, and Wayne Ray, as I mentioned also. Wayne is very well known, previously of First Global. He's done a lot of consulting also for a few businesses or directorships that I'm involved in. So Wayne is very well known. At this point, I'd like to actually call up Wayne to give an introduction of Caribbean Cream and talk about his role as mentor of the business.
Thank you, Mark. Please applaud him. I'd like to hear some noise in the house. Thank you, thank you. Ladies and gentlemen, good morning.
Good morning.
It's an exciting morning for me, and that is why I need to get you equally excited, because it's an investment opportunity to be a part of a successful family-run business, spanning 2 decades, not only the 5 years that we have focused on, but 2 decades of knowledge and experience in the ice cream business. Caribbean Cream has been inspired by what I would like to call her an icon in the industry. That is Carol Clark Webster. Carol, just wave. She's our chairman, and she and the company is led by a young, passionate professional, Christopher Clark, who, like his brother Matthew, you can applaud Matthew, that's the Clarks, grew up learning the business, and over the last 5 years has made the business the market leader in its industry today. One which is poised for further growth for its shareholders, management, and staff. A successful family-run business requires or has the prerequisites of learning from the bottom up. And that is what we see in a Caribbean Cream, that here you have an investment not only of money, but of time, knowledge, and a passion in your business. And that is important when you talk about bringing a business to others in the public. For me, the mentor of the company, the prospect to offer advice to the board and management on pursuing good corporate governance, sound fiscal discipline, and enterprise risk management was simply an opportunity that I was happy to accept. The fact is, the values that Caribbean Cream possess, that of being hardworking, that of being passionate individuals, that of being very knowledgeable about the business. It augurs well for establishing a solid structure that we investors would like to see when we get our reports from our respective companies. And those values are what Caribbean Cream has been bred on, and those values are what will continue to make it a sustainable company going forward. Though ice cream is a simple product to grasp and embrace, we eat it almost every day. Some of us maybe too much, but the intricacy of ice cream manufacturing in producing a quality product consistently and acceptable to the discerning taste of a variety of market segments, and doing it profitably, requires the business acumen that the Clarks possess and that they have demonstrated year over year. This isn't easy for any business to take a product that most take for granted as, oh, this tastes good, but consistently have that quality each time to allow for people to say, no, I'm going to buy it over and over again because this is a product which I am happy with, not only because it tastes good, but because it has that quality going over and over again. That is not easy to replicate, and they have done it year after year. The Clarks have over the years invested and reinvested in capital and human resources to sustain the growth of the business, and they have recognized that their story, their passion, and their expertise is not only worth sharing, but also worth investing in. One need just to look on the asset growth over the years, and you'll see that they have put their monies where their mouths are. The opportunity being provided in this initial public offering, or IPO, is to sell shares valued up to 25% of Caribbean Cream. And I invite you, therefore, to be prepared to be attracted to the story of a sound, successful company and have the opportunity to become its newest shareholders in a week's time. Thank you very much, and the story now unfolds.
Thank you very much. Before we move on to Chris, before we take on any transaction, it was a great feeling getting to know Chris. What was very interesting as Lamar and I got to know him is, he was somebody who got to work every morning very early. He left probably the last person to leave work all the time. And we like to look at intangibles before taking on any initial public offering at SSL. And getting to know the managing director / CEO was critical to us. So, we found if there was a part that broke down at Caribbean Cream, as Chris was going into his org chart and his management structure, Chris would be probably one of the first ones to fix it. And we found that to be very interesting. Something that we learned about the family immediately too was, Chris was very blunt. He was very to the point. He knew immediately what he wanted, I think, out of the transaction, the IPO, and we liked that a lot. There was no back and forth. I think also what was good is, Chris is a very decisive CEO, and that was very impressive to us also. And so we learned this as we went through the transaction. One of the things that we really liked with the offering, and we continue to like, especially in this economy, where you're seeing some businesses actually continue to go to business in December, January, and February, is the price point, which you'll see in the presentations as we go throughout today. It's a down market price point, which we think is excellent when you look at the cost. And the different wordings are used: standard ice cream, economic ice cream, things of that nature. We think that's very attractive for going forward for investors. But one of the things that we did at SSL is we said, well, let's take it to some of our clients also. So let's take it to many different demographics. Let's take it around. We had a national shotgun championship at Jade Garden Restaurant, and we served that ice cream. And what we found is everybody loved that ice cream, and people really liked it. And we said that this is a deal that we really want to do, because because the ice cream can really tend to cross over actually. So we've seen where Chris has actually and his team and Caribbean Cream now have the ice cream in supermarkets. It's in Mega Mart now. I think it's in a progressive group as well, and that's again very interesting to us. So you're seeing where it's in the fudgy, and Chris can speak about that, and it has had a huge success there. But one of the things that we liked is that with a lot of our clients is that they really enjoy the flavor, they really enjoy the taste, and that's something that we really look to do with all of our customers. So Chris, I wanted to call you up so you can give your presentation, talk about the history and your business.
Alright, thank you. I'd like to start off by giving a brief history of the company. In 1987, Carol Clark was hired by Things Jamaica to manage the Devon House ice cream shop. In the more than 25 years since, she and her company, Scoops on the Limited, has made the Devon House brand into a world-renowned brand. Now, this happened when me and my brother we were young, children. So you can be said that we grew up in ice cream. We used to work in the shop during the summer and Scoop. We used to be in the back mixing the stout and the ice cream and stuff like that. So that's how we were born into it. Eventually I went to the States, got an engineering degree, worked for GM for a while, got an MBA, then came back home to work for Scoops. Within my first year back, I spearheaded a project to install a mix plant. Now, mix is a term for the combination of milk and sugars and fat that make the base for all ice cream. Now, this not only, base. So to this base, you would add rum to make rum and raisin. You'd add pistachio to make pistachio ice cream. Now, this not only reduce the production cost for Scoops, but also enable us to make a different type of ice cream. And that's how Creamy was born. We decided to make a bulk ice cream for the fudgy market or the mobile market. So, Creamy. Creamy is a standard ice cream. Now, to define that, you have your premium brands of ice cream, such as your Haagen-Dazs or your Devon House. And now compared to those, you have your standard ice creams, which are your creamies or your crazy Jims. Now, while these are less smooth and dense as compared to the premium ice creams, they're also more affordable. So as the quality goes down, the price also goes down. So that's the Creamy brand. It was introduced into the market in 2006 and was an immediate hit. And we have seen strong growth ever since. To the fact that we have sold, we have increased sales by about 50% per year. and the weakest year it was 40%. Now, the core strengths of Caribbean cream is its ability to produce a high quality product and give the consumer the best bang for their buck, regardless of the price point. We will continue to improve on this strength by investing in more efficient equipment and better manufacturing practices. CCL makes 20 unique flavors that are specific to the Jamaican market. The top-selling flavors in Jamaica are grape nut, rum, and stout. The top-selling flavors in the States are vanilla, chocolate, and strawberry. So obviously this is an advantage to a local supplier, where the bigger guys in the States will not be able to give the Jamaicans the taste that they want. We also introduce a new flavor every quarter. The reason we do this is to make sure that we're always looking for the next big hit. So we have to continually try a new thing to make sure that the next hit is ours. We distribute our ice cream through the depot model, which is basically a depot, which is a place where the fudgy or the bike vendor will come. They will buy their ice creams and cones or whatever else they may need, and go on to sell it in by the scoop. We have about 20. We service about 20 island-wide, about 3 that we control, but it's island-wide. This is a org chart for a Caribbean cream. It is my goal to keep the structure of the organization as flat and as simple as possible. Reason for this are obvious. We need to keep the administrative costs down. To accomplish this goal, CCL conducts training throughout the year. The training will be in customer service or best manufacturing practices, for example. This not only gives us a more productive workforce, but also allows us to empower our staff to make sure that the organization remains flat. Now, future plans is what you guys really came here to see. We plan to build a large cold room. We plan to install a high capacity blast-free freezer. We plan to expand our warehouse and our factory, as well as increase our working capital. Now, the cold room. Our current undersized cold room will be replaced by one that can hold about 5 times the amount of product that we now have. We will also take this opportunity change out the Freon refrigeration system to a more efficient ammonia one. This will allow us to have a harder ice cream, which will give the vendors more yield per box, or more scoops per box. Obviously, the more cash that they make, the more that they can give to us. This will also allow us to not have to use off-site storage during peak times. During the Christmas that just passed, we had to store about 20,000 boxes off-site. That was very expensive, and also it was a logistical nightmare to get it to a selling point on time. Okay. Now there's the blast-free freezer. The new blast will be designed to harden 4,000 boxes of ice cream in 10 hours. This will replace the 3 inefficient ones that we now have. These take a combined 48 hours to freeze the same number of boxes of ice cream. Now, this is the factory as it now stands. We're supposed to have lapel mics, so I was supposed to walk over there, but I'm going to do it from here. Can you hear me?
Yes.
All right. The factory, this is the warehouse. Lapel mic. This is the warehouse where the ingredients go into. So this is the start. The factory space is here. The factory space is there. This is where the ingredients will be turned into ice cream. Everybody still alive? Yeah. Hear me? Okay. So this is the factory space here where it's turned into ice cream. This is our current cold room, which is where we store and which we load the trucks to come out. This is an empty lot here. So, next slide. This is a rendition of where we want to go. Now, the empty lot was here. This is where the new cold room will be. After that's installed, we will assemble the old one and put a factory in a space. Now this space will be about 50 percent larger than the space that we now have. Now this allows us to move the equipment from the factory space that was here into here, and this will free up this building to be the warehouse. So this now entire building will be the warehouse where we can now keep all our ingredients. So that's it for that part. Another thing we plan to do is increase our working capital. Reason will be this, that we'd like to start to buy commodities such as sugar and milk powder from the world market to to reduce our costs. This will also allow us to buy long-term contracts to ensure that our costs are stable. Now, our customers. We have different kinds. There is the consumer who eats our ice cream. We have a responsibility to ensure that what they are eating is safe and the quality is the best. Then there is the fudgy or the creamy or the back vendor. We have to make sure that they are able to get the yields that they need from a box, and also that the depot is a one-stop shop. They're able to go there, buy the ice cream, the cones, the dry ice, whatever they may need. We also need to support them with shirts and caps and whatever ways that we can ensure that they can sell the most cream. After that, there is the independent depots. Basically, we just sell to these guys who then sell to fudge guys, that type of thing. About 60% of our business is selling to the independent depot, with 30% selling to the same fudge guys through depots that we control. It's about 3. The rest are just people, like often somebody just comes to us to buy like a 1 quart or a box of cream for a party or something like that. Now, creamy versus the competition. Challenge is a company that is no longer around. They were the makers of the Roadrunner and Shazam ice creams from back in the day. I can only guess at why these guys failed. To the best of my knowledge, they grew too fast and were not able to manage their cash flows. I like to think that if there was a junior market back then, they might still be around. But then, just a guess at it. There's Nestle. In 2006, when I first started to make ice cream, they control about 50% of the bulk market. And today they are no longer in the bulk market. The reason for this is that they used to have a factory in Jamaica that they closed down, and they moved that production to Rep, which they eventually closed that down. So they moved that to the States, and this eventually caused them issues in their supply chain, where they were not able to supply the market quickly or respond to changes in the market. And today they are no longer in the bulk market, as I said, but they are for us in the supermarket shelves. This brings us to Smith.